Hey everybody, this is Jim at SP500chart.com using time-honored techniques to understand modern markets, featuring daily technical analysis videos of the S&P 500 index. First off, I want to say that if you're a subscriber, you get to see this within you'll be able to see this within about an hour of the close on Monday, October 3rd. If you are not a subscriber, then you're seeing this sometime after the close on Wednesday. I just need to remind you that the website and this video are only for educational purposes. Nothing stated at the site or in this video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I'm not a licensed professional, and now I've got it here in print. I am just a guy who draws lines on charts. By the way, I want to say thanks to those who have subscribed. Pretty good response right off the bat. So I'm hoping that that others catch on and might join in on the fun. But let's look at the S&P. All right, we are looking at the part that we have been concerned with over the past couple of months, and that is all of this volatility that set in here since the second week of August. After the breakdown of this large head and shoulders pattern right here. Remember, head and shoulders, left shoulder, head, right shoulder. There's the breakdown. We got a roughly about a 50% retracement at this level right here over 1220, and but you know, it doesn't look like it's going to get higher than that as things stand right now. It could. But today marks the breakdown of what I believe is this consolidation pattern. However, there's a little bit, a few things I need to show you that you need to make your mind up over. The first thing is, as the market really showed weakness today, and I decided to go ahead and draw this line extremely carefully under this area, the lows right here, and the lows right here. Why did I do that? Well, because I mentioned in the weekend update video or weekend review, whatever you want to call it, I mentioned that this might be a two-headed beast, something of a two-headed head and shoulders consolidation. So if that was the case, I wanted to make sure that I had this line right here drawn exactly right. And so I went to redraw that line because I think it was just kind of pretty close, but I wanted it to be to the T. And lo and behold, I've got that line to the T. That line did break down. And I want to show you a little bit of the action that took place today. Then we're going to look at some potential targets. The first thing is, for the past 1, 2, 3, 4, 5 days, the markets had been in a descending channel. And that channel really kind of helped us make, helped me make a few trades. Nothing huge. I'm not stepping out in a great show of tremendous faith right now, because anything that was done before, roughly, what time was this? Midday today. Probably around 1 o'clock. Anything that was done before 12 or 1 o'clock was done on a hunch that this pattern would break down. The breakdown just happened today underneath this neckline. You can see that there were 2 attempts to get back up to that, and each time that line was touched, the S&P sold back down. So this looks to be, particularly with the close under 1100, that this is a breakdown of that consolidation pattern. Now, what does this mean for the future? Well, if we measure the pattern based upon the double-headed head and shoulders notion, which I think is probably a fairly reasonable interpretation, then we are looking at a move with today being the breakdown under that neckline, it actually measures to a little bit less than 1020, and I think that's a reasonable target. Now this purple line right here is the extended neckline from the inverted head and shoulders that marked the market, a bear market bottom. I say the last bear market, but what happens in regards to this line is very critical. And I want to show you two things that are kind of lining up here. The first thing is we've got this extended neckline, okay, that's going to be at roughly 1120. Excuse me, 1020. And then we also have the head of this inverted head and shoulders right here that's a little bit lower than that. But I think both of these areas should provide significant support. Now, I'm going to kind of maybe speak out of turn here and get a little preliminary. I think it's very likely that we see this move down here. What would happen then if we rallied back up to 1200 or so and then started to head back down? Well, that would make this whole thing right here a really large head and shoulders. That's really preliminary, but it's something that's certainly worth keeping on the radar for something that could be happening in 2012. Look, guys, the economy is not good. While things were technically as strong as they have been since the 3909 bottom, I didn't let the economy bother me because the technicals were pretty evident and pretty strong. However, now that the technicals are weak and are showing more weakness, then I think we need to look at the technicals and also for the possible trigger points in the fundamentals that could be adding fuel to the fire, so to speak. What I'm saying is this: when you come strongly off a bottom like this, the market technicals can often really overcome a lot of bad news, and we know that happened because we saw it happen all throughout the latter half of 2009 and for much of 2010. So technicals at times can overcome news. However, when technicals get weak, then bad news is just fuel on the fire because the stock market is already primed to head down. So anyway, I just want to throw that out. It's not that I'm changing my opinion over the importance of technicals as opposed to news. I'm not changing that opinion. I still think technicals drive the market. And I think that news is included in the technicals, that technicals take everything that's known into account. But what I'm saying is now that the technicals in the market are very weak, I'm thinking the news is just going to, any bad news tomorrow in this market goes down more. Now, what am I doing? Well, I made two trades today. I won't bore you with the details. They were both winners, and they were both in a 3x bear fund. And but I didn't want to carry that because when I started to see this little pattern develop here, it looked to me as if this market might be wanting to at least mount some type of little snapback rally. The weakness at the end of the day made me think that might be a mistake that I did that. But just the same, as I was looking at this descending channel that was right here, we'll make this red just so it stands out. As I was looking at this descending channel, and that was part of what was driving my trades, was this little channel right here. When we got up over that, it told me that this could be a potential little sideways pattern that's going to develop here that could lead to a move back I was thinking even as high as 11.17, 11.18. But I'll be honest with you, the jury's still out on that. With this weakness at the end of the day, I'm thinking that that I may have covered those positions a little early. So be it. They both made some money. So that's kind of what I'm looking at right now. Again, it's looking fairly apparent that that the move out of this pattern should eventually take us down to around 1020 in the S&P. It could even be a little lower than that. But there we should find two levels of support that are very near each other. So what I'm personally hoping will happen is that maybe there'll be some more weakness tomorrow, and then there'll be a rally, or maybe 2 days of rally back to this neckline. I hate to say it, guys, but I still want to make safe trades. And with having had 1, 2, 3, 4 really strong, well, I take it back. With having an overall area of weakness over the past week or so since this 1195 high, I just have a hard time being excited about initiating short positions 9% over 9% under a high that existed less than a week ago. So I'm waiting for a rally to short rather than trying to pile on. Chasing it going down can be just as bad as chasing it going up. So, but that's me personally. You see the chart, and I hope I've made things fairly clear what I think's going on here. You need to do what you think is right after you do your due diligence and your research. But look, thanks for watching the video. And as I mentioned at the outset of this video, if you're seeing this on Monday, thanks for being a subscriber. If you're seeing this on Wednesday, the 5th of October, please consider subscribing. It's not expensive at all, and the response so far has been good, but of course I'd like it to be a little bit better. But at any rate, I hope whether you subscribe or not, it is my sincere hope that you get something out of these videos, because you can learn in retrospect as much as you can learn on the fly as things develop. So anyway, that will be the schedule. Monday and Tuesday videos will be made available to everyone on Wednesday. Wednesday and Thursday videos will be made available to everyone on after the close on Friday. And then there'll be a weekend video that will happen sometime between Friday and Sunday afternoon, and that will be made available to everyone. So look, thanks again. Take care.